Okay, so this week in FinTech, it is all about the drama. Seriously, we're diving into three huge stories. A student loan giant navigating some serious political minefields, a wellness app that's facing a major lawsuit, and a huge payments company making a really bold play for a US banking license. Let's get right into it.
This quote from our source material really just nails it. We are absolutely following three completely different plot lines with SoFi, MoneyLion, and Checkout.com. And trust me, each one tells us something really important about where the world of fintech is heading.
So, here's the plan. We're going to start with SoFi's wild roller coaster ride with Washington politics. Then, we'll unpack the big legal battle that MoneyLion is facing. After that, we'll dig into Checkout.com's super ambitious play to become a U.S. bank. And then, we'll wrap it all up to see what it all means.
All right, first up, SoFi. This is the digital lender that pretty much built its entire brand on student loans. And now, a single policy shift out of Washington has just created this massive moment for them, one that's both a huge opportunity and a huge risk.
And here's the spark that lit the fuse. The new administration is starting to unwind the student debt forgiveness programs from the previous one. Now, a policy change like this sends massive ripples through the financial world, and SoFi is sitting right at the epicenter.
So how did the market react? Oh, instantly. SoFi stocks shot up by as much as 3%. What you're seeing here is investors betting big that as those federal forgiveness options start to dry up, borrowers are going to rush back to private lenders like SoFi to refinance. It is a textbook example of politics driving the market.
But, and this is the really critical part, it's a total double-edged sword. On one side, you have this incredible opportunity, right? A potential boom in their main business. But on the other side, there's a pretty major risk. This whole thing puts SoFi right back into the political spotlight, and that could very easily reignite some intense scrutiny over the entire private student loan industry.
The source material had this perfect analogy for it, comparing SoFi to Taylor Swift. And it makes so much sense. They're this massive player, adored by their user base, but they're just so big now that they can't help but get dragged into these bigger political fights. It really captures their unique spot in the market.
So what's the big lesson here for SoFi? It's that the company's fate is just incredibly tied to the political winds blowing in Washington. A single policy change can either supercharge their business or put them directly in the crosshairs. It's a very, very high-stakes game they're playing.
Okay, so if SoFi's drama is all political, our next story shifts gears into the legal arena. We're looking at MoneyLion, a company that's now facing a lawsuit that gets to a really core question in fintech. Where do you draw the line between innovation and, well, exploitation?
So first, you got to understand how MoneyLion pitches itself. Their whole brand is built around this idea of financial wellness, of empowering people. They bundle services like cash advances and tools to help you build credit, positioning themselves as a helping hand for consumers who might be underserved by traditional banks.
But that whole feel-good brand promise, it's now facing a major challenge. The city of Baltimore has filed a lawsuit, and the accusation is heavy that MoneyLion actually preyed on the very people it claims it's there to help. That's a huge problem for their narrative.
So digging into the details, the lawsuit is claiming things like deceptive lending practices and violating consumer protection laws. And MoneyLion's response? They're calling the whole thing politically motivated and say they're totally confident in their compliance. So what we have here is a classic standoff.
And the takeaway here is, honestly, a huge warning sign for the whole industry. Any company that's operating in these sort of regulatory gray areas, blurring that line between providing access to credit and potentially taking advantage of people, well, they're walking a very fine tightrope. One little misstep and you're looking at regulatory battles and a PR disaster.
All right, for our final act, we're moving from lawsuits to a massive strategic power play. We're talking about the global payments giant Checkout.com and a very quiet but very calculated move they're making to basically own the fundamental plumbing of payments here in the US.
So here's the headline. Checkout.com, this London-based company that's worth around $11 billion, is applying for its very own US bank license. Now, this isn't just some small expansion. This is a fundamental change in how they plan to operate in the American market. It's a huge deal.
So why would they do this? Well, it all comes down to one word: control. See, by getting their own bank charter, they can cut out the middleman. No more partner banks, they can manage all the payment settlements themselves, they're less dependent on other regulators, and they can build a way stronger foundation for their U.S. expansion.
And why Georgia, of all places? Well, that is not random at all. The state is home to what they call Transaction Alley, a hub that processes a jaw-dropping 70% of all U.S. payments. By setting up shop there, Checkout.com is planting its flag right in the heart of the American payments world.
The source material had another killer analogy for this one, a huge London-based player making a move in Atlanta. Yeah, it might seem unexpected at first, but when you look at the strategy behind it, it makes perfect sense. It's a bold move, but it's also a really smart one.
The big takeaway from this story? It's simple, really. In this next chapter of fintech, the real power move isn't just having a slick app. It's owning the infrastructure. If you control the pipes, you control the flow of money. It's as simple as that.
Okay, so we've got a political roller coaster, a legal brawl, and a huge strategic masterstroke. Let's try and pull these three very different threads together and see what bigger trends they might be telling us about the state of fintech today.
So let's just quickly recap what we've seen. SoFi's story really shows us just how deeply tangled up fintech is with politics now. MoneyLion's legal battle throws a spotlight on this widening trust gap and the regulatory risks involved. And Checkout.com's big play proves that for a lot of companies, owning the infrastructure is the new name of the game.
And all of this kind of leads to one big, fascinating question for the future. We're seeing fintechs act more like political lobbyists, face lawsuits just like traditional banks, and even try to become banks themselves. It really makes you wonder, as this whole industry matures, are we just watching the disruptors slowly turn into the very establishment they wanted to replace? Something to think about. Thanks for tuning in.